Hi there. Archer Daniels has declined by over 29% year to date. And some people think that this company is undervalued. And to understand this, you have to answer some questions. Important questions. The first one is, has the business improved? Then, how do they make money? Why did the stock price drop? Does the management take care of shareholders? Is the stock price undervalued? And lastly, will the stock price go up? So let's start with the first question. Has the business improved? Well, you only look at their latest presentation, Q3. You see that their earnings has declined by 43%, adjusted earnings. Total segment operating profit has declined by 28%. The return on invested capital has declined to 8.8%. It's still good. And same for the other metrics. Also, cash flow from operations has declined by 39%. This is a huge drop. So, to answer the first question, no, the business hasn't improved. But you have to understand more about this company. So let's go to the next question. How do they make money? If you read their reports, their annual report especially, you can see that the company generates revenue from merchandising, transporting commodities, manufacturing products for use in food, some industrial applications, and ingredients and solutions for human and animal nutrition. So in this way, they make money. Now, this is only an overview. You can have an idea from this picture. But you can also look at their segments. They have three main segments: agricultural services, oilseeds, carbohydrate solutions, and nutrition. You can see by segment and sub-segment: agricultural services, crushing, refined products, and other. Same for carbohydrate. And their most important segments are, as you can see here, based on the revenue, 480 million, is agricultural services and oilseeds, and carbohydrate solutions, starches, sweeteners, and corn processors. And you can see that the revenue compared to 2023 has declined quite a lot. Now, once you understand how they make money, you look at their segments, what they do, what they produce, you can answer the next question. Why did the stock price drop? As you can see, a decline over 30% in the last year. So, to answer that question, you look at the segments, what they do, and ask yourself, what are their costs? And the answer is raw materials: wheat, corn, and oilseeds. If you look at their prices, you can see that wheat, the price of wheat in 2020 was about $543. And then in 2022, that price went up to over 1,000. So more than double. And if you look at Archer Daniels, same thing happened. 2020, the stock price was about $40. And in 2022, the stock price was close to $92. You see the correlation. Wheat, the stock price of wheat, and the stock price of ADM or Archer Daniels. Plus, you have to understand that they not only depend on wheat, but also on other commodities. For instance, corn. Same thing. The price of corn in 2020 was about $374, and in 2020, the middle of 2022, was about $790. And then it has declined. Same thing with the stock price of Archer Daniels. And then you look at oil seeds. 2020, $160 close. 2022, close to 300. And then a decline. So that's why the stock price of ADM has declined year to date over or close to 40%, especially from its highest peak. A decline over 47%. Once you understand this, it's better for you to analyze this company and come up with the fair value. You can also see some reports about oil seeds, how production was and the average price due to inflation. Now, let's answer the next question. Does the management take care of shareholders? Because this is quite important. Quite important. You invest in this company and you want a nice return. So, to answer this question, let's look at the number of shares. You can see that the number of shares has continued to go down from 563 million to 483 million. This is great. This is quite great. And they also said in their presentation, they return 3.1 billion of cash to shareholders through dividends and share repurchases. You don't see that in the stock price because of that decline in the revenue and earnings. But the number of shares has declined, and that's good because in the long term, if their business rebound, they improve their earnings and revenue, the stock price will go up. Then you look at the dividend. How much they pay? 50 cents per share. And if you look at the history of this company, you can see that the dividend from 2019 has increased quite a lot, from 45 cents to 50 cents. And if you look at the whole period, you can see that this company has continued to increase its dividend year by year. You can see here. Also in 2008. The dividend increased by 1 cent, but it's still good, despite that decline in the stock market. So they are taking care of shareholders to answer this question. And by the way, you can also look at the management. Their salary plus bonuses. You can see that Luciano, the CEO and chairman, you can see here their total compensation for 2021, 2022, and 2023. You see that he gets about 23 million a year, 24. And if you look at 2019, his total compensation was about 18 million. And in 2020, about 22 million. So the increase in his salary and bonuses wasn't that high. I mean, you see an increase in the revenue because of this inflation and the stock price goes up. And then you expect that their wages will go up. Same thing, an increase by 40% or a double. But that didn't happen. So it seems that the management is reliable. They don't increase their wages with a growth rate over 50%, but with inflation, in line with the market. So that's great. They pay a dividend and do more buybacks. So the answer is yes. They really take care of shareholders as they can. Then the next question, is the stock price undervalued? To answer this, you have to look at the market cap, 24.6 billion, right? And you also have to look at the revenue. You can see here. And the most important thing is their profits. You see that for the 9 months, their earnings before taxes were about 1.5 billion. And for the last quarter, 100 million. They got 100 million because they had some impairments, asset impairments, and other costs. For this quarter, they should have delivered about 500 million in earnings. So you can expect from this business about 2 billion a year. And even more. As the prices go up, they make more money in revenue, that amount can increase over time. So 2 billion. We can also add the future buybacks and dividends, and the stock price is fairly valued, in my view. I don't consider ADM to be quite undervalued. I see this company fairly valued. Not too high, not too low, but fairly valued. And by the way, you also have to be aware of these prices: wheat, corn, and oilseeds. Because if they go down even more than this, then ADM will continue to decline in the short term. For the long term, the price of wheat, in my view, will continue to go up. And same for other commodities, because there is a need for them. We need food. There is no doubt. But as I said, in the short term, these prices can go down back to 400 or even more, 300. And that's the right time to invest in those companies when you have a margin of safety. As I said, for the moment, the stock price is fairly valued, in my view. If you have other valuations, you believe that they have more opportunities, then maybe the stock price is undervalued based on your analysis, and you can take advantage. For me, it's fairly valued. You can expect a 10% per year in the long term for this company at the current price. Then, the next question is, will the stock price go up? And the answer is simple: yes. As long as the management takes care of shareholders, they do more buybacks, they pay this dividend, nice dividend, the stock price will go up. In the long term, of course. And you can see the increase. Don't expect huge returns, better than S&P or other companies, technology companies, but you can expect a nice return. Between 8 and 10%, depending on the price you pay. If you buy now, you might get a nice return. If you want a better deal to wait for a decline in those commodities, you can take advantage. Wait, be patient, and buy when the stock price is really undervalued. As you can see here, market price, the value, intrinsic value, and when it gets below, you start buying. So that's it for this video, and if you have other questions, please let me know in the comments.